As we move into our next session, Investment in Geopolitical Age, we are reminded that investment decisions are not made in a vacuum. They are deeply influenced by the global political landscape. Please join me in welcoming Mr. Khalid Al Amir, Lead Investment Policy and Practice, World Economic Forum.
Hello. I'd like to invite my distinguished speakers to please come to the panel, and I'll start introducing them as well. All right. Bismillah ar-Rahman ar-Rahim. Masal khair jami'an. Good afternoon, everyone. My name is Khalid Al-Amr from the World Economic Forum's Trade and Investment team, and I'm delighted to be here today to moderate this session and to be back at AIM. This session on investment in the geopolitical age comes very timely. We are in a new geopolitical age. If we hadn't realized that before, we definitely realized that last Thursday. And for businesses and governments, this global landscape can seem more fragmented and perhaps less predictable. Success now means being able to track these shifts, understand their drivers, and act strategically. From our previous work on geopolitics and trade, we found that success comes from having, for both governments and businesses, a geopolitical radar to be able to spot these evolving dynamics, a geopolitical sonar to understand their root causes, and geopolitical muscle to building resilience and agility in these times. This is not just about risk, as when done right, these can help seize new opportunities. And we're very fortunate today that today's panel brings together diverse expertise from government, private capital, and sovereign investment. Together, we'll explore how fragmentation demands new strategies, where barriers may open space for new partnerships, and how business and governments can stay agile, resilient, and forward-looking. So let's dive right in. And let me begin by introducing my esteemed panelists. So first we have Stephen Chiobo, Managing Director at Stonepeak and former three-time Minister in Australia. We have Her Excellency Ibtisam Al-Farruji, Undersecretary for Investment Promotion at the Ministry of Commerce and Industry and Investment Promotion from the Sultanate of Oman. And we have Sharif Bayani, Head of Portfolio Strategy at Mubadala Investment Company. So let me begin by you, Steve. You have a unique vantage point in that you've been across both government and the private sector. So drawing on that, how do you think countries and companies can achieve trade and investment success in this geopolitical age? What advice would you give governments and investors to really be able to seize opportunities?
Thank you very much, Khalid. Thank you. Thank you very much, Khalid, and good afternoon to all of you, and great to be here with my fellow panelists. Look, it's a great question. I mean, the one point that I would start out with is to, I guess, pull the reins back a little bit on the notion that we are in unprecedented times. Unfortunately, these are not unprecedented times, but what they are times that we haven't seen for the best part of 50, 60, 70 years. I mean, for the last 70 years, economic orthodoxy has been to have liberalised trade and liberalised investment. And we've seen the direct consequence of that liberalisation has generally been a material improvement in living standards globally. We've seen more efficient allocation of capital, and we've seen some of the negative impacts that flow from that as you have capital allocated more effectively and efficiently in particular markets. So where, for example, there's a labour force cost advantage, capital would flow to those labour-intensive industries, as we saw in large part, really headlined over a number of decades with the shift from a lot of Western democracies to emerging economies like Vietnam and China. That's now changing, and clearly there's a very big mandate that President Trump has, where he's coming to the table and saying, if you elect me, I'm going to reimpose tariffs and I'm going to shift the political terrain. Now, that's new in the current context, but in an historical context, that's not new. what I think's happening now is we're seeing the markets react in a way that reflects a growing sense of urgency or perhaps seriousness that in fact what was said is actually what's coming to pass. And there was a throwaway line under the first Trump administration when it was said the difference between the media and the public is that the media takes President Trump seriously or literally, but they don't take him seriously. Whereas the general public does not take President Trump literally, but they do take him seriously. And in my view, what's happening now is that once again, we're seeing the capital markets globally saying, you know what, we actually need to realise now that the rhetoric and the action are matching. Now, the $64,000 question to my mind is, what does this actually mean in terms of strategy? Is the president remaking the US economy in such a way where he will reimpose these tariffs over the short, medium, long term with the express intention of providing shielding to those industries where the United States no longer was competitively advantaged? Or is this just about creating political capital so that they can renegotiate and try to shift the goalposts in a number of markets that the US wants to export to? Now, it doesn't have to be the case that it's one or the other. It may in fact be more accurate to say that it's a blend of both of those outcomes. But really, your ability to discern the difference between where this is explicit policy intent to recreate manufacturing in the United States. Now, what that manufacturing looks like, who knows? It could be anything from the most sophisticated and advanced manufacturing systems like, for example, iPhones or laptops or polysilicon chips or, TSMC and those types of things. Or it could be something as basic as, are they going to make shoes again? Are they going to make tennis rackets and items like that? I mean, we don't really know, but if I was to make a bet about where I see the United States going, there can be no doubt that there is a resolute focus by the US administration on two key areas: energy security and national security. And in the great power rivalry between the United States and China, I think that President Trump has a laser-like focus on building domestic capability around ensuring domestic superiority when it comes to energy security and when it comes to national security. So anything that hangs from those threads, be it data centers, be it submarine cable, I think about infrastructure the most, be it data centers, be it submarine cables, be it AI chips, because they all hang on that national security thread and then increasingly energy security thread, I think the administration will be unapologetically focused on building that domestic capability in the United States. The other things, shoes, tennis rackets, not so much. So for businesses, how do you navigate where you're going to have to be able to set yourself up? Because I think if you're going to be in a space, in a policy space, where you're going to be touched on by national security considerations, or you're going to be touched on by economic security, energy security considerations, then it's going to be incredibly difficult. Whereas if you're in an area of the market where those don't really have an impact, then I actually don't think it's going to change that much.
Thank you, and I'm glad you mentioned infrastructure, because that would have been my next question to you, and I'll come back to it in a minute. But you mentioned emerging economies, and I think we're lucky to have a representative from the Sultanate of Oman, a very emerging, up-and-coming economy here in the Gulf. So, Your Excellency, Oman is taking a very proactive approach to investment promotion. Even as the global economy becomes more fragmented, Oman is positioning itself to attract investment in this environment. What do you think are the key levers for success during these times for an emerging economy like Oman?
Thank you, Khalid, for bringing Oman into this very important discussion, especially in such a situation. And allow me to go back a little bit to the history, when actually such a situation is not something new to the economy. We have been going through a similar situation the last 50 years, starting from oil and gas price fall in 1970 toward financial crisis in major economies, toward the pandemic very recently. And I think if there is any learning lessons out of this is that most of the economies as well as the countries had was forced to be more innovative, creative to overcome such a situation. And that's why I think we in Oman look into such a situation as an opportunity where we can tap in and actually help the world and the global to overcome. And we have started actually planning for investment promotion like 5 years back, where we are, we look into Oman, the value proposition of Oman through our Vision 2040, which we launched in 2020. And since then we were looking at Oman, what Oman can offer to the world actually in terms of investment and trade as well. And that's why we came up with different initiatives since then in different pillars, starting from digitalizing and streamlining the process toward introducing new law and regulations and bringing new programs like residency program and bringing also a unit called Invest in Oman to facilitate and serve the strategic projects. And actually, Vision 2040, when it comes to investment, has put a very strict KPI on FDI, where we have to reach 10%. The FDI has to reach 10% of GDP by 2040, and we have to rely on non-oil industry by 90% on GDP by 2040, which is very aggressive. And when we look into the performance for the first 5 years, we have seen that there is a huge progress in terms of attracting FDI the last 5 years in Oman. In 2090, it was 12.6 billion of FDI contributing into the economy, and now it is almost 26.4 billion Omani riyal of FDI, which is a huge, jump. The annual growth of this FDI is 16% almost every year. 50% of that goes into the industry or the manufacturing. So looking to that number, Oman is doing very well in terms of attracting investment, and we see this is an opportunity for Oman actually to cater the need of different economy, to connect and also to invest and re-export to the different economy that might be suffering actually to deal with such a situation.
Thank you. I think that's a very excellent example of how governments can remain agile, not just during this geopolitical era or the economic era, but even from before. And it's an excellent way to see how shifts in investment. And we were even talking earlier about how the mandate changed from not just promotion, but even facilitation now and investor aftercare. So it's excellent to hear that. Moving on, I want to ask you, Sharif. Oh, mic got stronger, bro. From your perspective at Mubadala, you're operating really at the intersection of both global markets and national strategy. How is this current geopolitical fragmentation reshape perhaps sovereign wealth fund strategies?
Thank you, Khalid, for the question. I think obviously sovereign wealth funds, but investors at large are today evolving in a world that's a lot more complex than it was before. The way that strategies have been shaped for most investors before that, or actually still are shaped today, is through portfolio construction. Sovereign wealth funds are often very long-term investors. They invest across asset classes and across geographies. You mentioned both the local but also an international focus. And as they do that, because they hold assets for the long term, whether it's infrastructure or anything else, they can weather short-term volatility. So diversification was key, and we think that diversification is still key. However, if we look at it now from even any global investor perspective, there's a bunch of things that maybe you need to add to diversification. One of them is recognizing that more fragmentation, you mentioned fragmentation, will probably create smaller economical zones and countries maybe that retract from the global order. If this happens, not all investors will continue investing in every region. You'll have investors retracting from some of those regions. When this happens, you get less liquidity. Less liquidity, you get dislocation. So you start having real opportunities to buy companies that are otherwise perfect companies, magnificent companies that are champion in their sector or champion in their geography, that suddenly now trade at a discount. So obviously this was the more opportunistic or the more positive side of dislocations. The flip side of that is if there's less liquidity, there'll be less monetizations. And so your exit strategy becomes a lot more complex. So how do you deal with that as well? I think this is twofold. On the one hand, we're seeing investors being a lot more careful in their underwriting. In the past 10 years, often you'd see investment decks with, growth rates and, like extremely optimistic base cases or investment thesis. Nowadays, most people factor in a lot of lower growth, a lot of, probably some combination of higher rates and higher inflation. People are generally just more conservative. But this only gets you half of the way. The other thing that in our view, at least as Mubadala, is extremely important is active asset management. As you know, we are direct investors and we actively manage all of the investments that we make. And the reason why it's becoming more important now is obviously when you underwrite, the situation is what it is, but we live in a dynamic world. You need to be able to pivot strategies of these assets as you go, and you need to basically preserve value or create value in these instances. The way we do it is that we are obviously very hands-on, but also we think that partnering with global GPs or local GPs, but in like-minded investors that have the local content and the local expertise is one massive value creator, especially at this point in the cycle. And maybe I think that's maybe the last thing I leave you with, I think, in terms of shifts of strategies. There's one thing that's very special and close to my heart, at least, about Mubadala. It's the clarity of strategy and transparency about what we do and how we report. I see this as an advantage because if you think of fragmentation, what different countries are trying to do in the end, they're trying to act in their own self-interest and figure out what's good for them. If as an investor you come up with a lot of clarity about your strategy, about how you deal with the assets that you buy, what kind of stewardship you have, what are your objectives, and you find the right alignment of objectives and of constraints as well, then this we think is also a big value creator. So I think in summary, it's really probably being more dynamic, more nimble, probably being more conservative and more prudent. Definitely not be just completely defensive, but be also on the lookout for opportunities. And that's probably the recipe for success, I think, in the next cycle.
Thank you, Sharif. I think that's a great example of how to build that resilience, but also how to create new partnerships in these times that would help you stay resilient and agile. Steve, I'm going to come back to you because I promised to ask you about infrastructure. We know these are very long-term investments, and so are there any specific considerations that governments or investors have to take when it comes to avoid geopolitical risk in infrastructure investments?
There certainly are. So infrastructure assets, being hard assets are at an interesting point in terms of their economic impact. So if you look at the broad macros, we know that there is depending on which measure you want to use, hundreds of billions, some say $1 trillion shortfall in the amount of infrastructure needed versus where there's money. And one of the gaps that Stonepeak's looking to fill is an opportunity to be able to deploy private capital into providing solutions when a lot of governments are fiscally constrained. They don't have the firepower that they had. They're looking to recycle assets. They're looking for private capital to come in, not only because we supply capital, but also because we provide expertise. So, for example, across the GCC, where there is perhaps less of a demand for private capital, but it's that ability to also bring expertise around execution and deployment, which people are looking for. So that's your starting point. But then you move into what I was touching on before about issues such as national security. Now, I look across the GCC and I as many people can see the very strong vision that leaders are having across the region. We know that the world is slowly transitioning away from fossil fuels. We know that there's an unapologetic focus on being able to say, okay, we're not going to be able to rely on oil and gas revenues ad infinitum. We are going to have to diversify our economies. So whether that's tourism or whether that's artificial intelligence or whatever it might be, those are going to be the key economic drivers of the future, particularly in the GCC. Now, I look at a market like North America, like the United States. In the United States today, where there is a push on, in particular, AI-enabled data centres, it's one thing to say, okay, well, let's go build a data centre. And let's shift it from being a cloud-based data centre to one that's really engineered around the whole concept of artificial intelligence, the key drivers of the future. Well, that's terrific. That's great to have that as your objective. But if it's going to take 2 to 3 years to be able to get grid connection, to get the energy that powers that data centre, what's the point? I mean, you'll have a 3-year lag on the technology alone. NVIDIA is releasing new chips every 12 months, if not more regularly. So that ability to be able to have energy security, to be able to get that interconnection to the grid, to be able to supply that energy, notwithstanding if it's clean and green, just being able to supply the energy full stop, is an incredible competitive advantage. And as data centers become more and more intensive in their use of energy, their demand footprint on energy, of course, continues to escalate. And so when you come to markets like here in the GCC, where there's an abundance of solar, where you have a competitive advantage on gas, where there is an energy advantage that's probably close to 30%, there is real opportunity here in that space. And that's why when I look at initiatives around MGX or G42 or any array of the different initiatives that governments are making across the region, I think it makes perfect sense. But here's the threshold question. And the threshold question is, can the GCC be a regional or indeed a global player when it comes to holding that data, holding that information? Because certainly you could argue regionally it makes sense. But given the significant cost advantage that the GCC has on, for example, AI data centres, could, for example, Europeans park their data here? Could Asians park their data here? Could Americans park their data here? And that is going to be the critical question where the geopolitics does come in. Because we know increasingly governments are saying, no, you can't, so-called localised data. You can't shift our data from this jurisdiction to another jurisdiction. So being able to navigate that successfully from a public policy point of view, being able to do deals between GCC nation states and Europeans or, the Chinese or Australians or whoever it might be, that is the critical driver of a successful deployment strategy, because you can deploy to the region and that's great, but it's only ever going to be a fairly modest market. But if you can deploy that capability and that capacity to Europe with 600 million people, that's the real market opportunity. And that is where it is actually going to be at the real coalface of national security concerns with commercial drivers. So being able to navigate that, I just cite that as one example. There are multitudes more, but that's going to be where where the rubber hits the road on public policy, political deal making, and the ability to realise future potential.
Thanks, and I think that's an excellent segue to Your Excellency, because we do understand. We've heard from Steve about the GCC's shift towards these industries and these sectors. So, where do you see these new opportunities? Is it also in AI data centers? And has there been a recent shift towards the different sectors recently?
Actually, Oman, as well as the other GCC countries, are blessed with our strategic location, where we are actually connecting the East and West. Leveraging on this location, as well as a positive relationship with the other countries, political stability that we enjoy as well, we can play a very important role as connector countries, where we can actually attract investment that are tending and targeting to export to different markets, emerging markets like Asia, Europe, and so on. And in Oman specifically, since we are enjoying plenty of natural resources, starting from the sun into the what we are targeting as well, in the hydrogen, the wind, and so on, we see that any investment that are looking into green products, that would be Oman would be the ideal location for them to export their product into the countries that are really concerned about the environmental impact and so on. So what we have done recently, that we have allocated 60,000 square meter of lands for renewable energy. Most of that will go into the hydrogen and wind, where we connect actually those lands into our free zone and economic zones, which are also enjoying very solid infrastructure in terms of ports and so on. One of our ports actually can sail and outreach to US, for example, within 17 to 20 days, which is the shortest period within the GCC area. So we can play a very vital role in that terms, especially when it comes to green products. Hence, we have a huge potential in the local market when it comes to manufacturing anything related to the green project, which is, let's say, turbines, solar panel, electrolyzers, and so on. And we have been witnessing very good momentum recently, the last 2 years, from international companies coming and exploring the market, the local and GCC market, and actually heavily interested in positioning Oman as a re-export and manufacturing hub as well.
Thank you. And I want to stay on the topic of these new priority sectors. We've heard it from Aman, who's trying to attract these investments. I want to hear it from Mubadala, who are direct investors. And what are the new priority sectors that you're looking at?
So maybe let me give a little bit of context on how Mubadala operates. Mubadala operates essentially by asset classes and to some extent by geographies. Within the asset classes, you'll have more sector focus, but the teams do not get allocated money on basis of a sector. Actually, we do the asset class allocation or the geographical asset allocation first, and then they are free to choose within the different sectors, because in the end, we believe that we can come up with great plans, but as all plans, until it hits the ground, it doesn't necessarily work as well as when you've planned for it. You need to have the teams independently able to identify what they believe is the best risk return at this point in time. So that being said, we have preferences and overweights. And the way we function is, as Mubadala, we have high convictions in certain megatrends, things like demographic change. The population worldwide is getting older. Things like shifting consumption pattern, for example, Asia versus the West. AI and technology that's really reshaping the way we function worldwide. And those megatrends and conviction give us overweights in certain aspects. So I'm just going to run through a few. We really like private credit, for example. It's not a sector, it's more like an asset class. It cuts across, but we believe that from a risk-return perspective, it brings quite a compelling advantage even in today's market. We're very big on health and wellness, both locally and internationally. Locally, you were mentioning G42 before. Locally, we have a partnership with G42, M42, which is our champion of healthcare provision across in the UAE. But globally, we also do contract manufacturing. We do drug discovery, AI-enabled in some cases, biotechnology, and a lot of subsectors within healthcare. Renewable energy and sustainability is also a big focus for us, essentially through our champion Masdar, that's now co-owned with TAQA and ADNOC. Masdar has grown from nearly nothing to now an entity that invests across the world and locally in wind, in solar energy, and that's looking also into hydrogen. They have a very interesting and actually very high target of building I think, 100 gigawatts of installed capacity by 2030 across their different, the different subsectors in which they work. Maybe one last one, which is maybe one of the most recent ones, AI and technology, recently created MGX with G42. MGX is our locally grown champion. It's a GP. It's raising money from third parties. It specializes across all of the value chain of AI, starting from semiconductors manufacturing down to data centers and all the way to LLMs and software, which are obviously at the core of AI. Again, a lot of sectors that we really like in which we're investing, but I think in our DNA we remain opportunistic and we try to go for what makes sense at the right time as well. So it's not only these sectors.
Thank you. Now, I can keep this conversation going all day, but unfortunately that's all we have. I do want to say thank you to our speakers for sharing their insights and their experiences. Thanks to AIM for giving us a space to discuss these topics. And at the World Economic Forum, we love to convene different stakeholders to discuss these timely, sensitive, and interesting topics. So we do want to keep this conversation going. Please approach us after this panel, and let's keep talking about this. And hopefully you learned a lot today, and that we can take this conversation forward later. Thank you all so much. Thank you.